and welcome to 11 Fest Spotlight. I'm Gwera. In this weekly show, we shine a spotlight on the best and the brightest in tech and financial services. So we try to understand what gets them going, growing, and what they think the future of the industry will look like. So on today's Spotlight, I'm particularly excited to be joined by creator and investor Kyla Scanlon. Really excited to have you here. Kyla, how are you doing?
I'm good. Yeah, thanks so much for having me. Excited to be here.
Yeah. Really, it's been, we've known about your work for a little bit. Very excited to have you. So thanks for making the time. On today's show, we're going to talk about Kyla's career and take a deep dive into the role of social media in the financial landscape. So let's just start off. Can you tell everyone really about like a 1-minute bio of who you are and what you do?
Yeah. Okay, that's a tough one. Yes, so I am Kyla, and I'm a financial educator and content creator and founder of a financial education company. And I live in Los Angeles right now, from Kentucky originally, and just am very passionate about financial education.
Nice. LA transplant from Kentucky. That's really cool.
Yeah.
So can you give us a little bit of a background about what led you into financial education and creating content around this? What was that journey like to where you're at right now? And also, please tell us about the channels that you use as well.
Yeah. So I've always been pretty into finance. So I graduated college in 2019, had majored in finance at university, but really got into the markets when I was in high school. Had started trading options in high school and didn't even really know that finance was something you could major in until I got to college and quickly switched my major over to that. I graduated and worked for a company called Capital Group and had a great experience there. Got to sit on a credit desk and get a lot of exposure to bonds, which are really fascinating. And then I also supported an equity portfolio manager and did just like a ton of modeling around that, did a lot of ESG work as well. And I ended up leaving Capital earlier this year to join On Deck, where I spun out an investment education arm for them, and then left them about 2-3 months ago to sort of like take a full-time leap on the creator stuff, because it ended up being a full-time gig alongside my other full-time gig. And so now I do a lot of different things on social media with the main goal to educate, to kind of provide maybe like a hopefully rational voice amidst the very noisiness of the market. So I talk about crypto, I talk about macroeconomic policy, I talk about the stock market. And I do that across YouTube. I do a daily news update on TikTok, and I write on Substack. So I write different research papers that tend to take a little bit of a philosophical lens on the markets, but then I'll also do deep dives, like I did a deep dive yesterday on digital infrastructure. So the main goal is like, how do we sort of hit as many people as possible in as many different formats as possible, which is why I am on so many different platforms, because I want to help people who learn different ways in different ways. And so that's the main goal right now, is just like producing content that hopefully helps people make sense of whatever is going on right now.
Yeah, I think I'm a big fan of your daily update on TikTok. That's how I discovered you really months ago. And really glad that you're keeping that up. I think I've learned personally, I work in financial services. Yeah. I've been working in fintech for the last few years, and I think I've social media, especially TikTok in the last few months, has really been somewhere I've turned to for a lot of content and information and education. So for me, you're curious, which platform is your favorite? I mean, I know you're pretty spread across all of them, but which one do you feel you've had the most impact in so far?
So probably impact and favorite are two different ones. So I really love my Substack. I love writing. So I started writing about options when I was in college, because nobody else around me, except for my dad, is into it. But like none of my friends were trading options. So I was like, okay, like I'll make a blog and hopefully I'll make other friends that are trading options and I can talk to them. So I've been writing online for, I guess, what would that be, like 5-ish years now. And so that's really my favorite. And I just love like getting my thoughts out in this like newsletter format and just sharing them in that way, and it just gives you a lot of freedom. I really love YouTube because I like the audience gives me a lot of space, obviously, to just like be like blah blah blah, and so I really like that longer form stuff. Like with TikTok, I actually get a lot of complaints on TikTok that my editing is so fast paced because I'm trying to tell them so many things in this like 60 seconds that I have. And so that can be, it just like really caps your, like the amount of information you're able to dive into. But TikTok has obviously been a huge growth lever for me. So love TikTok, mostly. Don't really love the algorithm sometimes. But yeah, TikTok's great, YouTube's great. And then my newsletter is probably my favorite just because I love writing. Yeah.
That's really cool. Yeah, TikTok definitely squeezing a lot into a short period of time. Like your videos, yeah, they are pretty snappy, pretty fast. Like I definitely like will pause and like just to look at a meme and then chuckle to myself. But yeah, no, it's great. It's kind of like I think with social media, we were moving into a space and time where like people are kind of like, the age of like the like super pristine, clean cut influencer is dead. I think people want to receive content and news and whatever from someone who's approachable, who's like a friend basically. So I think you do a great job of nailing that. But you talked about like writing about options. So as we all know, the like Robinhood options debacle, like I mean like just basically what happened in the last like year or so around like people like diving into financial services and using really complex financial instruments. Do you have anything to comment on that? Like we here at 11FS talked a lot about it when it was happening, but I wonder was the creator economy a part of fueling that? Like I know that there's quite a few people out there who are maybe giving misinformation, but yeah, what are your thoughts on that?
Yeah, so I was actually still at Cap Group when all that happened. So it was kind of interesting because I could see it from the institutional perspective. Like they were just like kind of like whatever, like and then from a retail perspective, it's like this is a revolution. And so just kind of like that dichotomy was really interesting to be able to see it from the inside and then to be able to like watch my friends be like, Kyla, oh my gosh, like how do I invest? And all of a sudden, a lot of people were very, very interested in the stock market. So I think like net, the whole like meme stonk debacle is interesting because it gets a lot of people interested in the markets, which is like good, right? Like we want more people to be talking about the stock market. We want more people to have opportunities to invest in the stock market. Like that's the main goal is inclusivity versus exclusivity. But I think there's like a huge problem right now where, and this is sort of compounded by GME and in some aspects of crypto too, is like I can go and invest in stocks and I should get a 100x return. That's what the stock market is for. And that's just like a totally unreasonable expectation to have. And you're going to get your feelings hurt because that's just not probably going to happen most of the time. So I think that's like really the big issue with GME is that sort of mindset. And then also we did see sort of these institutions like the whole payment for order flow conversation had to be had. Like, should you be paying like for this like access to these trades, and what does that actually mean in terms of like what execution prices look like? So I think there's a lot of just narrative around how markets are structured that GME was able to bring up. But I think net it does have an interesting impact on how people view the markets. Yeah.
Yeah, I think definitely, like you said, how the institutional versus retail. Institutional were like, yeah, we've been doing this forever, like calm down. Whereas like retail were like, this is, whoa, this is what they didn't want you to know. Like, I know this hack, like that was that. But then I'm gonna kind of pivot a little bit into talking about like crypto and Web3. So like I feel, and I, please definitely challenge me here, but you might have more context, but I feel that like the institutional versus retail side of things is probably on par now. Like there's people doing crazy things like staking, bonding on various platforms and exchanges, and institutional crypto users are starting to wake up to that. So it kind of has leveled the playing field. What have you seen in terms of in your experience and also in the work you've been doing around Web3 stuff?
Yeah, no, I mean, institutions are definitely waking up. Like, here's venture capitalists, like, they're starting to put Web3 in their bio, like, that sort of stuff on Twitter. Yeah. So we are seeing people, and it's kind of funny, like, VC world, it used to be, like, creator economy, then it was the future, somebody tweeted about this, like, it was creator economy, future work, and now it's Web3. So I think we are seeing sort of, like, this broad adoption of, crypto Web3 ideas in sort of, like, the private market space, and then I think the public market space is becoming increasingly interested, too. Jamie Dimon came out the other day or a while ago and was like, oh, Bitcoin's really bad and I'm not interested. But then you have like all the other major leaders of banks being like, oh, we think that crypto, like it's not going away. And so I think that institutions are like, yes, this is probably something that we should have exposure to. And with the Web3 narrative, like the fact that Facebook is pivoting entirely, or Meta is becoming Meta, like, right? Like that's a huge signal to Web3 and sort of, I think, like what's going on there. So institutions are definitely wanting a piece of the pie at this point, yeah.
So yeah, I mean, institutions are wading into the space, and retail is. I mean, I think there's still quite. I still think that, like, as someone who's like been personally, involved in crypto. Shout out to the ENS airdrop that happened this week.
That's cool. Yeah.
Like it's still quite niche. There's not many people, so I think that there's a big space to be filled in terms of financial education content. And I think that a lot of people are kind of are in that space. And in the past, we've had financial educators like Suze Orman and I don't know, Gary Vaynerchuk. I don't know, like people who have come before, and now it's, I guess, platforms are more democratized, so more people are able to give out financial advice or like education. Do you think? I mean, there's definitely that. With that comes like my concerns about like people receiving misinformation, or just like there's all these pump and dumps that are happening with these niche coins and all that stuff. So do you think is there a valid reason for people to be wary of the finance side of social media content and education?
Yeah. It's really unfortunate. Like on crypto TikTok, I would say like 85% of those people are pumping bags and trying to do rug pulls on people. And that's just so unfortunate, right? Because as a creator, you're able to develop a pretty authentic relationship with your audience. Like it's very much like you're not like a news anchor to them, like you're just a person. And so there's a different level of trust that comes with that relationship versus how you see like Jim Cramer screaming on TV. So I think people tend to trust creators more right now. And a lot of creators are taking advantage of that and like pushing their bags off to their audience. So I think it's really important to be wary of all this stuff. And there's just so much FOMO in the markets too. So it's like, oh, well, this person is promising like 1,000,000% returns. Like if I don't do that, like what's the point? And so I think that there's just a lot of like bad stuff out there. I really do. And it's super frustrating, like kind of as a creator to watch that happen. And that's why I do kind of some of the stuff that I do is like, oh my gosh, please, like it doesn't have to be this way. I totally agree with you. Yeah.
I think, that's, and it's not fair to discredit a whole community of creators also, just because there's a few bad apples causing people to be skeptical about the intentions of financial content creators. Like, I think it's not fair to discredit a whole, like, not all creators or whatever. But do you think there's a way to move forward by highlighting those who are actually trying to educate viewers, like rather than profit off of them? Like, what models do you think? Like, I know that like officially to give financial advice you need to get like certification. There's regulatory oversight around that. But like, what do you think is how do we move forward to like sift through the crap?
Yeah, I mean, the problem is with like the stuff that these like quote unquote creators who might be pumping bags do is just like, it's cool, right? Like, it's like, oh my gosh, I'm gonna follow them because they're going to lead me to great riches. And so like that's kind of the issue is like the people who are a little bit more inflammatory in terms of the content that they create, they're going to attract a wider audience because they're promising huge things. Like I'm very clear with my audience, like this is not investment advice, I'm just providing you information. And that's like people are like whatever, like if people aren't interested in sort of the nuances of the market, it's like why would they follow me? And so I think that's like kind of part of the problem is people want this get rich quick stuff. And so I do think that there's a lot of value in sort of like elevating creators who might just be, who are more focused on like the education aspect of it versus like, this is what you need to invest in. I think like the whole, like the investment advisory aspect of all of this is a little bit tough because creators aren't financial advisors and they shouldn't act like it unless they have the credentials or the regulation, the oversight to do so. Like there's a reason that there's that level of oversight is because that's other people's money that you're essentially the fiduciary of. So I think it's just it's a tough conversation. And there's the SEC, I think is thinking about it, but it's just tough to figure out like how do people get investment advice? Because the financial advisory industry is certainly not interested in most of these people. Like they're just not, the people that need the help the most are just not rich enough to work with these people. And so there's just a lot of misaligned incentives and that needs to probably be worked out. Yeah.
Absolutely, and with obviously the democratization of financial services and all these tools, like there's an appetite for education and knowledge. Like for example, so I'm from Uganda. Uganda's right next door. I'm in Kenya right now, but right next door to us, they just a fintech, literally today just announced a fractional shares product. So allowing people to invest in Tesla and like just American stocks with as little as like $1. So very affordable, and there's an appetite for that. Young people who are digitally native, and so while I'm excited about that, like in Uganda, I worry that it's gonna just be really like there's gonna be mass adoption, and people are just gonna go in and just buy super high risk stocks and like I think I forget, maybe it was the FT a while ago said that like the stock market is kind of being propped up by retail investors, like so the appetite for knowledge is growing, and for people looking to learn all these things, and they're turning to creators like you, they're turning to Wall Street Bets. So people tend to, I think like in conversations about this, people tend to overlook a little bit about this, but like how important is it to have a community that you can turn to, so as a creator, but also like as someone who's like participating in the economy, like especially when people have, like I said, a growing appetite for crypto, high risk, like young people, millennials, Gen Z, we are unfortunately not in a situation where we can buy a house for $30,000, like so people have like a higher risk tolerance, so yeah, how important is it to have a community to turn to?
Yeah, I mean, I think it's really important. And to your point about like education and people being interested in it, I think that is a good point. Like I probably shouldn't have been like, oh, great rich quick mindset is like the most important thing. I do think more people are like trying to pay attention to that. I think that with like the community aspect of it, like I'm very active on Twitter, and I have a lot of friends on Twitter, and I think that that's like really a community for me. It's like I can get feedback from them, I can bounce ideas off them, and then like with the markets went crazy yesterday from a macro perspective. Like 10-year yields jumped, inflation was very, very hot, and so I think just having people to talk about this stuff with is super important. So I think a community is definitely like one of the most important things that you can have. Yeah.
I'm curious also, so this is a bit of a veer, but like what's the most complex subject that you've had to explain, or at least like the meatiest thing you've had to break down on your channels?
So reverse repo, which is like a facility of the Federal Reserve, that was really tough because that's just kind of funky to try and explain like how reserves work, and like the idea of like the system being nudged around by the Fed, and like the liquidity aspect of it, and like why does it even exist in the first place, and then all the different stuff that they've implemented since 2008. So I think reverse repos were definitely like one of the hardest things that I had to explain, and I made a whole YouTube video on it, and I got a comment, and this is like a troll comment, but the guy was like, this literally made no sense, and I think it's just because the content, like the idea of it makes no sense, and I didn't make sense either, but so that was definitely like really hard, as these like very niche monetary policy concepts. And I've tried to explain like to myself, it hasn't been published yet, but some of the like Ohm in crypto, like Olympus, like I've tried to explain
Olympus
that.
DAO.
Yeah, that's a weird one. So
it is. I as a member of I'm an OMI, like even I'm struggling to explain it to people, and like I think probably like ENS, crypto wise, ENS is probably the easiest like concept and phenomenon to explain, like so that ENS stands for the Ethereum Name Service, which is similar to DNS. So it's just like imagine, so I'll give you the explanation. So imagine like buying a domain, and then all of a sudden someday GoDaddy gives you shares in GoDaddy, and with those shares you can vote and stuff. So that's kind of the way, and that's Simon Taylor. You met him, you were on the blockchain podcast. Great. So Simon is also really good at breaking down things like that. So yeah, it's tough. It's really tough, and I wonder if all this talk about democratization of finance, still like there's still a chasm and a gap. I think the stats are Americans, and even I think British people in a lot of countries, like most adults are at like a 5th grade reading level. So is it even probably like 5th or 6th grade. Yeah. Is it reasonable to expect like mainstream adoption of or understanding of these really complex media terms? Does the mainstream need to understand these?
No, I don't think so. Like, I don't think anybody, well, I think maybe like 99% of the population, they have no need to understand like what their reverse repo facility is. And I think it's important, and like kind of the way that like my main thesis is like we have to understand like the basics of supply and demand and how that works. Mm-hmm. Like if we can get more people understanding what supply and demand is, like that's going to be really key, because I think there's a huge gap in how we even understand how market mechanics work. And I didn't know about that 6th grade, 5th grade reading level, and that's really concerning. But I think like literacy across the board has to increase, because when it is a little bit lower than maybe it should be in terms of the market, that can lead to situations like GME exploding out of control and everybody kind of losing the plot, right? So I think that's sort of the problem, is we end up like really creating these like conflating all these ideas into one giant narrative when really they're all very separate entities. And so I think, no, like people don't need to understand the nuances of stuff. Like that's why you have people like Simon Taylor to explain them. But I think it is important to understand some of the underlying mechanics behind everything that's going on. Yeah.
Yeah, absolutely. I agree. And I think that, like, I don't want to go deep into understanding, especially American financial terms. I mean, America is probably, on a global scale, the reason why the US dollar is like used as like a reserve currency and is like one of the, there's more US dollars floating around the world than there are in America, is because of the robustness of the regulatory environment and the governance that exists in America. So I don't think it's necessary for all of us to know how that all works, but I think you touched on supply and demand being something that like people should have a vague understanding of. But when it comes to like personal finances, what do you think is really important for creators, and also to share, but also regular people to consume?
Yeah. So I'm going to explain and then I get to the point. But like I'm building a financial education company right now, and like one of the things that I've run into is there's so much to explain, and that's because personal finance, like in itself, is personal. So everyone's going to have a different experience with money and a different idea of what money is based on how they've had, how they've been growing up, their interaction with money in their first couple of jobs, how they save, what they like to spend money on. So it's just such a personal experience. But I think the biggest thing is you do need to save money. That is important. And I think it's also important to have some sort of investment portfolio. Like even if you only own the S&P 500, you're still going to benefit from the upside and be able, hopefully, and be able to put that money to work versus it just kind of sitting away in a savings account. So I think like net, almost a lot of people should be invested in the stock market and not just in their 401ks. Like having a personal investment portfolio where you're able to see that grow. And I think like not only from a capital appreciation perspective, but also because like all of us are economic entities. Like we are all participating in this economy. And I think that if we get more people, and this is probably like a big brain Kyla thing, but like if we get more people in the S&P 500, then they're going to feel a little bit more like they're part of this global, like this broader economic thing. So I think it's almost like a context switching thing where we have to get more people invested, not only because they're able to benefit from the upside, but also because they are the economy, and they should pay attention to a certain extent, like kind of what's going on there. And I think by being invested, that would be an incentive to do so.
Absolutely. And that's like, that's kind of the premise of a lot of like Web3 crypto stuff, because people are invested, people own those tokens, and they are, I've shouted out ENS way too many times. In the example of ENS, like, you have voting power as well, and like you can actually have your voice heard. So that's really cool. I think one takeaway of that is everyone should hold S&P 500 or something like that. But so I'm gonna just pivot a little bit to talk about like fintech, and
sure.
Because at 11FS we work in that space. We work in the space of truly digital financial services. So the best way to describe that is, if you look at the evolution of things from like in 3 phases. So we've had analog, digitized, and then digital. So when it comes to financial services, analog is like the bank your parents went to. You just go in person, get a debit card, get a stupid credit card when you're 18. you get your invoices, you get your statements in paper. That's analog. So digitized is just copying and pasting that into the digital space, so like into like an app. So now your bank has an app. Now I can cash my checks with a photo. I can talk to someone at the bank like, you know, digitally. And then we play really in the truly digital space. So that's like embedded finance and finance at the point of need. So like players like in Europe, you know, we've got Monzo, Starling, we've got buy now pay later firms, we've got Robinhood, even, you know, various that are using technology to actually have finance be truly digital. Who can you shout out, or who can you think of in the fintech or financial services space that's actually like playing in that truly digital space, or even who's in the digitized space on their way to the truly digital space?
I don't know. I mean, I think like the idea of BNPL is pretty interesting, and sort of like, I guess Square would probably, like, now that they bought up the BNPL firm, like the way that they're thinking about stuff and sort of the integration with crypto, I think is pretty interesting. And they seem on that fast path to sort of digitizing the next generation too, because they just rolled out Cash App. I think it's to under 13, or maybe you can be 13.
Under 18.
Under 18.
Yeah.
And so I think like that kind of stuff, like bringing in the younger generation is pretty valuable. So that would be like one off the top of my head. And then there's this company, and this is more like Web3, I guess, but this company called Meow, and they just announced like a big funding round. But they're helping to bring corporate treasuries into crypto. And this is probably like not exactly what I meant to be answering. But yeah, I think that concept is interesting, is like, how do you help these very like archaic institutions sort of get exposure to this next iteration of finance, right? So crypto being that idea. So I think that's another interesting one. And then I think there's a lot of interesting like credit card stuff. Like I was listening to a podcast yesterday, and it was like you spend money and then you get 5% back on Bitcoin. So that's like probably not a perfect example, but yeah, I mean, I think a lot of companies are starting to like, oh man, what was it? Like everything becomes a fintech company eventually. Isn't that a thing? Yeah.
That was from someone from A16Z, who said that every company will become a fintech company eventually. Yeah.
And so I think we're starting to see that. At Verizon, didn't they just announce that they were going to become a bank or something? So I think we're starting to see...
I did see that, yeah.
Yeah, so more and more companies are like money. So I think that's interesting, yeah.
Yeah, I mean, tune into 11FS's podcast, FinTech Insider. We talk a lot about that kind of stuff there. And
cool.
It's like, it's really exciting. I mean, it's exciting, but it's also like, it feels... I'm personally... It feels kind of... I'm kind of over it, like, cool, like Verizon's becoming a bank. But I'm more interested in the like really targeted, like niche iterations of financial services that are digital, so like that are able to help people. So, you know, that there's in the US, I think there's banks that are specifically designed for freelancers. There's Daylight, which is a bank that's targeted at the LGBTQ plus community. There's Greenwood, Killer Mike started that bank that's like targeted at the Black and Latinx communities. So like I'm really more excited about like banking that is truly for like to help like certain groups of people, and then moving away from these like massive big like institutions that just like have a blanket, you know, treating everyone in a very basic generic way. So but yeah, in your opinion, what do you think in terms of like with all this information that we have of financial education, all these niche creators who are you know sharing that information, what do you think the future of like of like the way people spend money or even, you know, use their money is going to look like?
Yeah, this is something I think a lot of, and I love the banking. Like, how do we make people feel more comfortable with their money? Like, that's always like such an important goal and something that we don't think about enough, I think. So I love that, and I thank you for like bringing that up. I think that's super important. But yeah, like how do people spend their money? So like I think consumer spending is really interesting because that's like 2/3 of GDP growth, right? So like how we think about the economy is in the context of how people spend money, which is like, ooh, like the incentives can be a little wacky sometimes, right? So the government is going to want to encourage people to spend money no matter what. That's why we saw so much stimulus. Not only, well, we saw stimulus because we needed stimulus during that time, but we also saw stimulus because they were trying to prop up aggregate demand. And so I think like like the idea, and then also like we get into the idea of consumerism being a problem. So like, should we keep on spending so much money on goods that we just sort of like accumulate and collect. Is that really like a good thing for society? And so I think I think there's going to be a world where we kind of invest more, obviously, like if we have this metaverse space, like more into a digital online presence. I don't know exactly what that will look like, but I also think like people are, becoming a little bit more interested in the stock market. So I could see more money flowing towards that. Right now, the average consumer is in a much better spot in terms of credit score than they used to be. So I think like there's a huge opportunity for people to go out and spend money on like innovation or just sort of invest in themselves. And so I'd love to see that kind of stuff where people maybe don't purchase sort of these like static, like fast fashion kind of goods, but more so like things that are net good for humanity. Yeah. So I don't know if spending will go that way, but that's what I would love to see. Yeah.
I really wonder. I mean, like, is consumerism and like this idea of capitalism, consumer fueled capitalism, like, will it stand the test of time? I don't know. Like, like even I'm having a really hard time. Like, I'm not even a boomer, but I'm having such a hard time like wrapping my head around the metaverse and like thinking about ways that I could even use it, and like outside of like work maybe, or like education, like, so. Yet to be seen. So we could go on for hours and hours about this. We are a little stressed for time. So we're gonna come toward the end of the show, and I'm gonna ask you one last question. So you can answer it, however you wish, however long or short as you wish. But so what do you think the future of financial education content looks like? Is it gonna look like advisory? Is it gonna be just like on TikTok, like little bits and pieces here? Like, in your opinion, what's it gonna look like?
Yeah, so, I mean, I am building a company, and so hopefully it's my company, but just kidding. I mean, I think, like, to answer it just, like, totally objectively, so, and this is something that probably a lot of people might not agree with, but, like, the markets are super cool. I think they're just kind of like sports. If like you watch companies, like it's kind of like watching the NFL. And so I think that we're going to see more entertainment built around, and this might be bad, but like, or good, depending on how it's utilized. But I think we're going to see things become a little bit more entertaining. And that's like what I try to do with my content, is like, hey, I'm not delivering this in like the most dry, boring format ever. Like, this is actually something that's tangible. This is something that can be funny, kind of like sort of like stand-up comedy around the markets. Like, I could see segments of economic commentary becoming a little bit more engaging, becoming a little bit more like a show that you would prefer to watch. And I think that would be really cool. And then I think also like we're going to have to start making content that reaches people from all levels. And so right now content is either very, very, very beginning. So like, I don't even know how to invest. Like, how do I get a Robinhood app? How do I, invest my first dollar? Or it's like very, very institutionalized, where it's like, okay, I've been a portfolio manager for the past 20 years, and here's how I think about like Japanification and how that's going to impact the United States. Like, another very important topic, but we don't really have like anything for that middle group, like the 20 to 36 or whatever, 20 years old to 36. And that's like kind of who I primarily, not to like pump myself, but like that's who me and I think other creators tend to target, is like that group that doesn't really get any content directed towards them. So I think we're going to start seeing financial inclusivity become something that is watchable and accessible, right? And so it's going to be something that isn't this like very dry, not that all stuff is dry, but like a little bit dry, a little bit boring, and something that is a little bit more interactive, something that has communities built around it. So I think like Reddit and Wall Street Bets is a great example of, you can sort of like talk to your friends about money. And so I think we're going to start seeing people like sort of build communities, like we were talking about earlier, around how they think about investing. And I think all that stuff is going to compound into the markets. Money is not this like scary thing that we shouldn't talk about, which is like a really big problem in the United States, is like we just don't talk about money because it's like, oh, it's not politically correct to do so, or whatever.
Taboo.
And so I think, taboo. And so I think that that's going to be another interesting thing, as we start seeing more and more people become more and more open about money. And we see this with how people talk about salaries now too. It's just like, we kind of have to have these conversations. So that's where I hope it'll be, is interactive, inclusive, and open communication. That's
really cool. I mean, I was going to even ask like, what's next for you, but you've kind of you've just given a very like clear idea of what's next, and for your company as well, and congratulations and good luck. So we're gonna come to the end of the show, so thanks so much, Kyla, for joining me. This was such a great interview, such a great chat, and we're probably gonna keep going talking about this later on. But where can people find out more about you and everything that you're up to?
Yeah, so I basically live on Twitter. So I'm on Twitter at Kyla Scan. I'm on YouTube. Just search Kyla Scanlon. I have a link in my bio on Twitter to access all my stuff, but I'm on YouTube. I'm on TikTok at Kyla Scan. I'm on Instagram at Kyla Scan. My Substack, my newsletter is kyla.substack.com. If anybody has any questions, feel free to DM me or reach out in the comment section on YouTube, and I'll make sure to answer them. But yeah.
Yeah, Kyla reads the comments, people. Even all of them.
Be nice, please.
Yeah,
Some people
be nice.
Yeah.
Off the internet. The place full of nice people, mostly.
Mostly.
All right, so that's all we have time for this week. Make sure you follow 11FS on LinkedIn, Twitter, and Instagram to stay updated on all the cool stuff we're working on. And also, I hope you enjoyed this show. So do subscribe to the 11FS YouTube channel, where you can catch up on this show, as well as previous episodes. We have so many. Have a wonderful week, and goodbye.